2 o'clock on a Friday in Central Standard Time. I am going to attempt to share my screen and see how that goes. Let's see. All right, so I'm gonna start the slideshow. And just for everybody's knowledge, I hate slides. I hate PowerPoints, I hate slides because I just start talking and I don't pay attention to my slides, but I am not gonna do that. So welcome everybody to the Asset Management Summit and Awards. Very excited about being on with Gary and Kyle. I've worked with them a lot. Great guys, and I actually love their podcast too. So we're talking today about KPIs, and I thought it was appropriate to kind of put up on the first screen, you know, a picture is worth 1,000 words. And truly a KPI is worth more than 1,000 words. I'm gonna click to the next slide. I didn't know that Gary was gonna tell you everything that either myself and or my team are involved in, but here's kind of a breakdown, and it's not to say, oh, wow, look how special he is. I mean, if you think that, that's great, but that's not the point. The point is simply, I don't sleep much. I love doing deals. I love getting involved in many businesses and having a great team do it, but I also am still kind of a control freak. I have to know what's going on in every aspect of all of my businesses. So essentially, when I wake up in the morning, I've got all these things on my mind. I do have a team, but I still like to look at things. So some people get up in the morning and they read the Wall Street Journal or a news rag or something like that. I get up in the morning and at about 4:30 or 5 a.m., I have 8 very prompt emails that come the exact same time. If they're 3 minutes late, someone on my team gets an email stating what happened to my KPI emails. But it gives me essentially the checkup, the current checkup of every single business that we're running. So I'm not going to go through all these different things. You can just see there's a lot of things going on that we're involved in, and it's impossible to focus on on more than one at any given time. So Rob, our graphic artist guy, put this: I wish when I woke up my office looked like that and I had breakfast waiting and a cup of coffee. That's not the case, but kudos to Rob for the good slide. You can see in the background on the laptop that there's a couple little slides of KPIs, but the reality is I go to Starbucks at 5 or 5:15 before I go to the gym, and I'm sitting on my iPad and I go through my KPIs. So what is a KPI? A KPI is a key performance indicator. It's a measurable value that demonstrates how effectively a company is achieving key business objectives. Sounds like a lot. It's basically a graphical representation, at least in my mind, that shows me whether we're doing good, so-so, or bad. And I try to use the KISS method for any of you that have heard me speak. Keep it simple, stupid. And I joke around. I love to understate myself, but I like to see things for the most part in green, yellow, red. Green, good. Yellow, Yellow is warning. Red is bad. So I can go through and look at daily KPIs. I typically have 60 KPIs on each business. So I can scan through them real quick, and, you know, colors work well for me. And so I can see if something is not doing well, or it's doing okay, or it's doing really well. So let's hop into this. So I'm going to touch upon property management KPIs, because I think a lot of asset management, I think a lot of the listeners, at least from what I've heard so far, are in the multifamily or storage facility or mobile home park investments. So these particular slides pertain to anything that is a multiple unit asset that generates revenue. So every KPI, it's just an example of a multifamily asset. The first thing I see is just a summary of how the asset's doing. As you guys can see, it tells me the total units, tells me some things I don't even care about: total square feet, average rent, blah, blah, blah. That's great. But for me, I look at this, I go straight to you probably see my mouse, the third row right here. I want to see, and this is up to date from our perspective as of midnight the day before. So it's 6 hours stale in my mind. Love to have it instantaneous, but I'll take 6 hours stale. So I can see I've got 0 pre-leased through yesterday, 19 in turnover. one in the common area. I have 2 vacant and ready. My overall occupancy is this. 1's given notice, 0 an eviction. And whoops. Then I can go real quick, and I like to see a comparison of what my month-to-date collections are, which are right here. I honestly don't know what date this one is from, but I can see, and it's sometime during the middle or late middle of the month, I can see I've collected 82.9%. And that's about 96,000 out of possible 100 and looks like 13, 14, 118,000. And then I see what I collected for the entire month, the prior month. So I can get a gauge kind of how everything is going. I will talk to you guys towards the end about, how you set up KPIs, and none of these come from any of the software systems, the off-the-shelf software systems that are property management companies use. So this is something that we actually create ourselves, and we will Jeff will, my partner Jeff will write scripts, pull the data out, and then we've got a set of probably 80 different KPIs which cover just about everything you'd ever want to know. And if we have clients that are interested in additional KPIs, it's very easy for us to create them once we have the data. So these are our KPIs. This is what we created ourselves, and this is how we look at, or how I especially analyze our assets. So on a typical property management KPI sheet, you get an email that has the graphic KPIs on it, and you click on, if I were to click on 90.3% on the email, it would actually pull up the data behind it, which is great. And I had also asked Jeff if I want to be able to forward some of this stuff to either an investor or to an assistant property manager or our lead maintenance guy. He also has a PDF. The entire KPI report is about a 2.5 page or 3-page PDF. It has all the colors, graphs, blah, 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 but it's a static piece of paper that someone can visually see if I'm going to make comments or I need someone else to look at something. So the next slide. So right here, rent collections month over month. This is one of my favorite ones. So what we have done is we do either last 3 months, like a T3 almost, or we'll go trailing 6 months. It just depends on what I'm looking for. We can do trailing 12 months, which is not a problem either. But what I want to know is I want to see how we are at any given time. At the bottom, you see the days of the month. So for this particular one, it looks like this was February, March, April, May. Yeah, it looks like this was May. And I can see that May is running above April, but below March as of the 4th. Now, that doesn't mean a whole lot to me. I'd have to go back and look at the month. That could have been, on the weekend. It just depends on how the rent was collected and when rent was starting to be collected. I get more concerned by day 7, 8, 9, and 10. As you can see, there's a steep incline right here. Then it kind of levels off by day 7 or 8. So the reality is, you want 100% every time, obviously, but for this particular asset, if I'm not following the general curve, I will know instantly. Like if May just goes like this for 3 days, I typically wouldn't wait 3 days, but instantly there'll be a call with the property management company. Hey, you need to tell me what's going on. I don't have to go through and try to pull reports and look at enormous amounts of data. I can either talk to our asset manager who's in charge of leasing and say, hey, this is a concern, go find out. That person will go find out. So for me, that's very helpful. And then it's pretty funny. Jeff, our COO, who created all this, he knows I love numbers, not just pictures. So I also have a bar graph. So I can see the same numbers and how things are collected. This may actually have been June numbers. I'm not 100% sure, maybe in May. But I can see how everything has been collected. So it's a nice, I call it like a checkup on rent. So keep in mind, this is just rents. This has nothing to do with any other operations other than rent collections. Then I get these other KPIs. And so each one of these is considered a KPI, key performance indicator. I want to know how many vacant ready units I have on that asset. I think there were 166 or something like that, or 218 on this one. How many vacant ready units do I have? So I have 3 vacant units ready. And I also can see what size the units are. That's helpful to me because if this number all of a sudden was 9 tomorrow and I see it 9 again the day after and 9 again the day after, I'm going to find out why they're not leasing up. And so I don't have to go in and try to pull reports. I don't have to go in the software. I can be sitting on a beach, like Gary does most of the time, drinking my latte, and I can just look at my iPad and boom, I can essentially run my businesses, or at least have some oversight on my businesses anywhere, anytime I am, by looking at the KPIs. And for me, that's key because we have about 12 different business ventures going on at any given time. So I love to look at the vacant ready units because that's money that should be there. And then I have over here, which I really like, is turnover units. So turn units are basically units that have just been vacated but haven't been turned yet into a vacant ready. So at first glance, oh, the guy only has 3 vacant ready units. That's good. He's all leased up. In this particular property, I remember this one. We had quite a few units that were down, and we had them in turn. So we had quite a few units that were turning. But the nice thing is, and you'll see a little bit later on, we also track leads. And so if I see leads that are being converted, I also know that we've got quite a few. I've got 10 one-bedroom, one-bath that are in some sort of turn. And so instantly we can call the leasing manager or find out from the head of maintenance and repair, where we are on, 5 A1 1x1 units. And so again, I don't have to go pull up software. I don't have to do anything. I can send them a picture. I can cut and paste this any given time. So I really like that. And then we typically will run in, for whatever reason, there were no move-ins or it wasn't reporting for the next 30 days. That seems a little odd because normally there's something there. But it tells me how many move-ins are coming in the next 30 days. And it would tell me what size units they are. And then these are the move-outs. And in this report, we have one move-out that was coming in May 15th. I don't know if that's a real name or not. Probably shouldn't be there. But anyway, we can see this unit's moving out. And it tells you what the rent was at the time they were moving out. So it was probably about $725, $735. So the next one, so we just looked at the 10, if you go back here, you see there are 10 A1 1x1s, one bedroom, one bath. So the next KPI that would be underneath it, and again, these would all be on one single email or a 3-page PDF. I cut and pasted these into slides so we could kind of look at them at a more micro level rather than just seeing a picture with everything on it. Because I'm used to seeing it that way, but most people who review this aren't used to that. So bottom line is I can see the detail or at least the status of where these 10 are by going to the next KPI that would be on the sheet. This would be right below it. So there's my A1, one bedroom, one bath. And so we have what day the units are supposed to be available. These are updated once a week. And so this is when they're supposed to be available. This is the turn estimate for each unit. And then like right here, if I had seen that it's supposed to be available on the 30th, and let's assume we're May 7th and there's nothing here. So this would be a yellow flag to me. I would want someone to fill in the information. And if there's nothing left to do, then it needs to be off this report and it needs to be listed as a vacant ready unit. So what it does is it gives us a lot of oversight as to what's going on with properties that may be in a different state, city, somewhere that we're not accessing, we can't physically access. So we literally can see what's going on. And then again, some people say, well, if a property manager or a leasing assistant leasing manager could essentially just fill in whatever they want or just not fill it in. Well, we don't allow that to be acceptable. So right here, 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 and here, I am willing to bet that I've got email correspondence from one of our asset managers that jumped on this immediately because I would have said something to them stating, why aren't these 4 properties filled out? So either they were sitting there, someone was lazy, didn't put them in, or they were getting to them, but I need to know a reason why, and that needs to be they need to be filled out the next day. It needs to be in the report the next day. So it's nice. I can get, again, I would have looked through all of these in a matter of like 3 or 4 minutes and had a really good idea of what's going on. So this is the detail on turnovers. One particular property, we had a bunch of month-to-month leases. Those of you that buy multifamily, sometimes you find out the last 30, 45 days before close. There may be some requirements as far as occupancy in order to close. And all of a sudden you have a very aggressive seller who just starts putting people in month to month just to get the occupancy number up. And we had that in this particular deal. So this is an interesting KPI right here. We have the unit number, we have the date that these are month to month, technically when the first month was supposed to be up, and they continue to renew. So you see I have red, green, red, green, red, green, blah, blah, blah. And you notice the green go to the black line or beyond, and the red are behind the black line. So the black line represents what the market rent is, and the bar represents what they're currently paying. So I don't like month-to-month leases in the first place. And I certainly don't like a month-to-month lease that's $100 or $75 less than market rate. If you're going to do month-to-month, excuse me, you're going to do over market rate. You charge a premium for it. And you don't even want to do month-to-month. So for example, for unit 1301, they're probably paying $30 more than market rate. Well, not that I don't want to kick them out. I want to encourage them to sign a lease, but I'm going to clear out these and these before I clear out the greens right here, because the greens are at least paying market rate. And so I'm going to get rid of the month-to-months that aren't paying market rate, or get them up to market rate on a full lease before I focus on those that are paying market rate or above. But this is key, especially if you have certain covenants in your loan docs, and you can't have a certain amount of month-to-month leases. This would be key for you to look through. So I love seeing this graphic, and this is just pretty. There are very few of us that are looking back this far constantly, but when we bought this asset, we were at 84.4% occupancy, and then right around COVID time, COVID was right about here. We were still slightly increasing occupancy to 90.3%. So it's a nice bar graph. It's a nice line graph. It's good to, if the numbers look good, it's good to clip and put into an investor summary. We send out investor summaries to our investors once a month. Some do it once a quarter. When you have KPIs, again, you can say less with a picture. So, and those of you that have multifamily or syndications, you'll realize that most people don't even read half of what you say, but they do focus on the pictures. So lots of pictures, lots of graphs, excuse me, certainly help out. Okay, so this is a market rent summary. I like this. We are probably doing market surveys about every 60 days. And those of you that don't know what a market survey is, you either have your property manager or your assistant property manager, or maybe someone who is on your asset management team if you have a team, and they go out and they survey what market rents are going for about the same size units you have within a couple miles, which your competition is currently leasing stuff at, or at least advertising at. So we look at this, and we have the green represents, if I can remember correctly on this particular graph, the green actually represents what the market is, and the black represents where we're at. Here we were right at market, so you won't see any difference. Here we're a little bit under. We have room to grow here, room to grow here. And based on our current collected rents at that time, we had a lot of room to grow here. It looks like $140 to grow to market rent. So this gives us a heads up. So if market is 750 and we're here, we have an issue. Now, if I go back, this is where it gets fun. I can go back real quick and look and see how many 2-bedroom, 2-bath B3 units I have that are vacant ready. And my gut tells me I had very few. Otherwise, I'd be pushing market rent. So if they're already leased up, there's not a whole lot I can do today about it, unless I go back and I see I've got 14 of them. Let's see, B322. Well, here you go. I have no B322s. See? So B2 2x2s, 2-bedroom, 2-bath were the last category I had. So I didn't even have any of those remaining. So that starts to make sense why I'm so far away. Management before we got there leased them all up at a rate that is not allowing much of turnover. So with those, I'm sure, again, this is just one of many assets. I'm sure that we started raising the rent significantly to get back up towards market rent. But again, this allows me to go back through, not having to go in the software, run certain reports, hoping they match up, hoping that they're not just static reports, but I can go back and pull data on previous days. I can go straight to my KPIs and I go back and forth real quick, circle it with a pen on my iPad, write out a little note on top of the screen, and then send it. And I'm off to the next asset that we're looking at. Here, this is very important. We have this in every one of our Monday meetings. How many leases are signed for the month? So this is a report that's month over month, and it looks like this report came out May 6th. So this report would have been on the 7th for stuff that happened up until midnight on the 6th. So again, the first 5-6 days depends on, what day of the week the first started, depends on whether it was a holiday or not. So they're all going to be about the same. But I want May to be higher than the prior months. You can see April, there was a big dip. So again, one of the things you can do without having to ask your property management company, you can go back and look, if for some reason May is trailing really low, go back and look and see how many vacant ready units you have, because it'll tell you how many vacant ready units you have. We already saw it on the screens above. So if May seems to be low and it's not following the curve from the other months, why is it not following? Are we not advertising, which we'll get to in a second, or do we not have any inventory? And as you guys could see on this particular one, we didn't have a whole lot of vacant readies. We had 3, but we had, I think, about 19 or 18 turns. So if I see this going down, I have my asset manager very quickly hammering on the team to get these turns moving. And then I get even more frustrated. There's nothing wrong with this asset, but I would get more frustrated when I see that 5 of the turns don't even have a description as to what needs to be done. So in my mind, we're not that busy leasing up things. Someone needs to make sure all the data is there. And if it's not there, someone's going to lose their job. Not the first time, but maybe the second time. I can't see your faces, so I'm assuming you guys are smiling at my humor. So I'm going to touch on this real briefly. This is a leasing summary. Again, we use the same red and green. I told you Jeff tries to make things very simple for me. This would suck if you're colorblind. So if you're colorblind, we would do, it's going to be funny. We'll do 50 shades of gray, and you can figure out which your shade of gray works. But we can do it if you're colorblind. But for me, red and green makes complete sense. So these are upcoming lease expirations. So when you're looking at lease expirations, the idea is you want to keep the tenant in, because if you don't keep the tenant in, you're going to have to pay for a turn. There's going to be at least 30 days down. It's a mess. You lose money. You want to keep the tenant in and increase the rent. So what we first do is I look at what's coming through the pipeline. And on this page, you can see, let's say there are about 16, 17 coming up in the next 60 days. So our asset manager would sit there and talk with the property manager, the assistant, saying, okay, for example, 2-309, their current rent is 500. The black line represents market rent at, looks like 585. What's the likelihood they're going to rent for 585? Because we need to renew them at this rate. That's a big jump. Someone's paying $500 a month rent, you're increasing their rent by 16%. So that's a big jump. So you don't know if that's going to work or not, but you're going to know ahead of time, because 60 days out, you should already know, hopefully, whether they're going to renew or not. And if they're not going to renew, we need to be marketing those assets at market rent or better. So this gives a real quick snapshot of where we're going. Like, I would want to definitely want whoever was in 2-205 to continue with a 12-month a renewal, because they're already paying above market. And if I can squeeze a little more, I will. That's a good one. But you can see that's only one out of here. And then here's another thing. This is what we call an anomaly. Unit 2-321, are they just not paying rent? That would be my smart ass response. So apparently we've got someone living for free on unit number 2-321. The reality is it's probably not somebody living for free. It's probably some employee of the property management company that didn't put the data in that day. But I would circle this, just like I'm pointing it out here, circle it with my pen on my iPad, do a screen grab, and I'd send it. And 99% of the time, it would be corrected within an hour. This is a KPI we run. Many times skips. If you guys don't know what skips are, people just leave. They leave in the middle of the night, they're gone. We had a change in management in January, and so beginning of January, so we had some skips. Most of the time when we run KPIs and have skips, it's 0. Rarely do we have someone that just skips in the middle of the night, but we had a little bit of a flight going on in December and January and then February. But since this is a report from May, you see there's nothing in April and nothing in May. So I'm also willing to bet, so you can tell the story, a picture's worth 1,000 words. Well, I have 10 skips. I seem to have 17 turns. My gut tells me that many of those skips were some of these turns. So you can kind of see how you picture the story together just with KPIs. Let me see, check on my time. Oh, I'm doing good. So then we have, so this right here is my favorite part of the KPIs. And there are very few software programs, property management software programs that track things like this. So we require, well, I should back up. They track prospects, but they don't provide this type of key performance indicator and charts that make it very easy for you to follow and see if someone is or isn't doing their job. And quite honestly, that helps you decide where you should or should not be allocating your resources. So prospect resources are one of my favorite. This is what generates revenue. This generates revenue, and it also shows you where your occupancy, why you're not 95% or greater physical occupancy. It's not about rent collection, but it's about how well is your marketing going. So I'm going to go into this for a few minutes just so you guys can see. So this is for the month. And again, we were tracking this, I think it was through May 6th. So not, you have 6 days, but even in 6 days, we have, it looks like 16, 6, 22, 26, about 28 prospects in 6 days. That's pretty good. And as you can see, the majority of the prospects during those first 6 days were coming from apartments.com. So we pay for apartments.com. Facebook is free. APTS.com is another site that we pay for, but it's much less than apartments.com. This is from our own website. We had one lead from our own website, and then we had a referral. And then we have prospect traffic for the last 3 months. Typically this number right here, again, it's through May 6th, represents all of this. So the number actually may be a little bit higher than what I'm estimating. It looks like it's about, it's about 30, 32. So again, May looks like it's starting out much stronger than March, April, and I think this was February. I got cut off in my screen grab I put on here. But May was starting out much stronger. So for me, it's funny. Now I'm going back, and it's 5 months ago. I'd be curious, and I'd go back and look at our software. What were we doing in May, 5 months ago, the first week of May, that had more prospects? Was it something we were doing? Were we advertising differently? Were we advertising a special? I'm just curious, because what I'm going to do is next May, I'm going to compare next May to this May. This particular asset hasn't gone a full round yet. We actually picked it up in October of last year. So October right now will have seen a full cycle, so we can actually compare data to our own data. And when you buy an asset, you don't always get the data in a format that you can compare it to when you start moving forward. But through your own software, now that you're managing the asset, if you start in October, by the time you get all the way around the next year through October, you now can go month to month, year to year, per month based on your own team. So then it really shows how effective you guys have been. So I love looking at this. I love looking at how the traffic is increased or decreased. And excuse me, you can see really consistent March, April, February. And again, this is an older screen grab. It's 5 months old, so I don't know how May turned out. My gut tells me with COVID, May probably did kind of a flat line. I shouldn't say flat line with COVID. It flattened the curve probably around day 14, 15, and probably came in under. Data up here, this is the fun part. This is how you can determine, are your resources being spent in the right manner? I always look at what is my cheapest cost to gain a tenant, and does it make sense time-wise? So what's interesting, I look at this, the most prospects we get from advertising. I think this may be like a quarter to date or something like that. This may be year to date. This is probably year to date. So we had 158 prospects from Facebook, okay? Of those 158, we converted 8.2%. It's not a huge conversion. Matter of fact, it's the lowest conversion rate of any of our potential advertising mechanisms. So we did 158, converted 8%. So that's about 13 prospects. We got 13 leases out of it. But the interesting thing is Facebook costs us nothing, zero. Doesn't cost a thing. You put up a Facebook page, you do a little, you do a little post, couple likes, it's done. So from a bang for buck, this is clearly the best because it costs us nothing. So remember, we got about 13 leases from here. Then we go to apartments.com, which is the most expensive, by far the most expensive. You have a platinum, a gold, and a silver level that you can do with apartments.com. I'm not telling people to go use it. I'm just 90% of our deals are apartments.com, and we have tons of clients that use apartments.com. So it's just a necessary, I don't want to say evil, it's a necessary service that really helps you guys out. So you can see we have 23.6%. I think that's probably costing us, I don't even know what's costing us, $800, $900 a month. But that's a very good ratio, 23.6% conversion of 89 prospects. So that's going to be about a quarter of 90. So you're looking at like 22. So we get 22 here. We had about 13 here, but the 22 here, which is almost twice as much, cost for 3 or 4 months, probably cost us $3,000, maybe $2,500. So there is a cost associated with it. Then referrals. So on our category, referrals simply means a tenant referred a family member or a friend to the apartment complex, and it depends on whatever the referral fee was, $100, $250, whatever. We'd have to go back and look at it. But as you can see, based on the number of prospects, 32 prospects, we have a 37.5% conversion rate. So tenants seem to be really good resources. That's 10 leases from tenants that referred it. Now, still less than Facebook. But if you look at the percent of conversion, it's much, much higher because presumably the tenant showed the family member or the friend the apartment complex before they even talked to us. So that's always a good resource. And we try to encourage our tenants for referrals. And obviously we can encourage them through monetary compensation, discounted rent, Target gift card, something, because that's a great resource. And if you don't have KPIs to track it, you have no idea what you're doing. You really don't know where your prospects are coming from. You don't know your conversion. Conversion is key to everything. Website. This is really disappointing. Website is just reality is website is just a business card. At least from our perspective, it's just a business card. We're not driving a ton of traffic. We're not spending money to drive traffic. So we've had 8 prospects come through on the website. Great. We've had a conversion rate of 62.5% to give us a whopping 5 leases. The website did cost us something to build, not much. And there's a monthly maintenance fee on it, which is not much. So it's not a free conversion, but it is a conversion. Drive-bys, I'd love to see more people coming in because of drive-by. I can tell you this particular unit, we've done almost a complete facelift on it since this report. So I'd be anxious to see, I can't remember what the drive-bys were when I looked at it this morning, but my gut tells me they're far greater than 7. That was for the first 4 months. I would imagine it's significantly higher because we did put new signage. We did do some other things because we saw this number so low. If people are willing to drive by and walk in, we end up having a 71% conversion rate. Now, in this scenario, it meant only 5 people. And then walk in is kind of the same as drive by. We did create another category. I think, quite honestly, it's for people that didn't have cars. They have gotten off the bus and just walked up to the door. 50% conversion rate. Apartment finders, 50% conversion rate, but we had so few prospects from them, it didn't make a whole lot of sense. So then you get to the bottom, and so the total prospects going into May 6th, we had 305 with an average conversion rate of 19.7%. So we're converting 20, I'm gonna round up 20% of 305. So 1 out of 5 people that are coming through any one of our potential advertising sources as an average are getting converted. So you look at this as an asset manager, and the first thing you think is, well, how do I increase the conversion rate? You look like you've got all the potential marketing resources you could use. And I don't know, you're not going to spend any more money on apartments.com. So how can I increase the number of prospects coming in? One of the things we looked at and we did was we put lipstick on the property, and, we spruced it up. We changed the signage. We added some color. So I know for a fact that drive-bys have gone up, but this is great because you can sit with your team and there's so much information. This could be an hour discussion with your team, literally an hour discussion where you go back through, you look at the website, there's some keywords we can put in. Should we have somebody look at the website and start driving traffic to it? I don't know. It depends on what it costs. If it costs $5,000, no. If it costs a couple $100 and see if it makes a difference over the next 3 or 4 months, that may have been a great deal. But the reality is we're converting 1 out of 5. So a prospect in my mind is someone that actually wanted to come look at the apartment complex. Every one of these has pictures except the referral. So Facebook, we have pictures, apartments.com we do, website, drive-by, walk-in, apartment finders, apartment guide, and Google, they all have pictures of the site. So the pictures didn't scare anybody away. They showed up at the apartment complex. So then the key is, how do we go and seal the deal? What is it we're missing? And so we have these type of kind of training or direction programs or discussions with our team all the time to try to increase this rate. So I think this, quite honestly, is one of the biggest KPIs that's the most important to me, because this actually drives your leasing. And at the end of the day, if your leasing's not there, your asset's going to perform horribly. Yes, you can get out of control expenses, and we'll get to that in a little bit. But if your leasing's not there, it kills everything. So this part of the KPI sheet I get every day on multifamily or assets that have lots of units is my favorite. And this was just a single slide that just shows the overall. It's a bigger slide. And by the way, anybody that wants a copy of this presentation so they can look at these slides a little bit better, just simply email. I put it at the beginning of the chat box, but email Kaliser, Kaliser, law.com, and just say, can you send me a copy of your slide presentation? Happy to go over them with you guys. It's not the end of the presentation. I'm just telling you that I'd be happy to provide this for you guys. So this is something that very few people take into consideration. And as Gary had said, we bought, rehabbed, leased, property managed, and sold over 9,500 single family homes in 4 states with 7 different MSAs or large city markets. So we had our own construction team, we had our own property management team, everything was done in-house. And so the things that we developed KPIs for are things that we always had issues with, and we could never get the information in an easy format for us to review with our teams from the software that was out there. And we used Yardi, we used OneProp, we used Rent Manager, we used AppFolio, we've used a bunch of different softwares. So finally we decided, hey, you know what? Software is not really going to change that much. Why don't we build our own KPI system and create scripts that pull the data out each day so that we can then manipulate the data such that we can see what's going on in the way we want to see it. So closed work orders. A lot of you may be saying, who cares? You know, you're boring me. We just ate lunch. I'm about to fall asleep. Don't fall asleep yet. So closed work orders, we look at this. This is key to me. So this, to me, right here, represents customer satisfaction, client satisfaction, tenant satisfaction, excuse me. Because what we did is we categorized all the different types of work orders. Now, some of them we throw into certain categories. The largest work order that we get, and probably consistent with everybody on here that manages, is plumbing. And right behind that's electrical. So if there's a plumbing issue, and I would get very agitated when I see this, and I'm trying not to get agitated now, even though this was 5 months ago. But we were having some repair maintenance issues on this particular asset. And so out of 97 plumbing issues, they were resolved on an average of 4.6 days later. Okay, now the plumbing issues could have been leaking, it could have been a drip on a faucet, it could have been something else. But in my mind, I go to a whole different place and I'm thinking a toilet is overfilling, a shower is doing something, money is going down the drain, or there's water coming from the second or third floor down to the second and first floor. And it took them 4.6 days. Now that's probably not the case. And we could go in and, like I said, we could click on this right here. If I clicked on it, it would give me a data sheet that would go by unit and a description of what the issue was. And then by looking at the issue, you can kind of get an idea of why it may have taken so long. Could be the tenant never let somebody in. It may not have been an emergency and they just didn't let anybody in until they were there. Don't know. But we use this guide as customer satisfaction. So for example, work orders are typically done, typically these are used only on occupied units. Otherwise, it would be under another category like turn or repair, just simple repair and maintenance. It'd be under CapEx category. So this is on units that are actually occupied or have been occupied when these were done. And so like AC, 14 of them, average wait was 5.1 days. Well, I sure hope that wasn't in August, or because this is ongoing. This is a rolling cumulative chart right here. I sure hope that wasn't going on in the summertime. I can tell you that tenants would not be happy. This particular asset's up in Amarillo, would not be happy in West Texas in August if they went an average of 5 days without AC. So that would be a pet peeve of mine. I would want them within a day or two. I would want them less than a day, but what I want and what I get may be two different things. But to me, I'm sure when I went over this report, 5.1 days was, you know, it's unacceptable. Appliances. It's a very broad category, but, you know, in theory, it's a repair on an appliance. Either gets repaired or gets replaced. If it's replaced, you typically have some inventory in stock and you can replace it. So why did it take 6.5 days? I want to know. I want to know why something took 6.5 days on an average. But again, it's only 11. It could have been maybe one burner out of 4 wasn't working. I don't know what the issue is directly. But again, I look at colors and I look at how far these colors are going on this chart. And so what stands out, 8.9 days, but the description is property needs. I don't know what property needs are, and I know it's only one of them, so I'm not too worried about it. I sure as hell am glad that a roof leak, which we only had one of, was fixed in 0.4 days. That makes me happy because a roof leak does not mean anything good's coming out of that. But again, plumbing, 97. I would want those that have the most issues, plumbing and electric, to be really, really down there in days. When I see this, and I'm on a 1971, 72 property, and you're going to have plumbing and electric issues, I make sure, or I would want to make sure that my repair maintenance guys are pretty savvy when it comes to basic electric and plumbing. Obviously, if it needs to be a licensed repair person, we can do that. And that could be the reason why some of these are 4.6 days. But for 70% of the issues, I want some very experienced repair and maintenance guys that are familiar with basic plumbing and basic electric, because these make up probably 80% of all of the work orders. So this is key. I think this is very important. So I love the fact that I get to see these on the multifamily. I get to see them on every one of our multifamily, and no two look alike. It's interesting to see how certain units, certain assets are doing better than others. So I really like that. And then down here, this is, I made it a small chart because there's not a lot to put there. We had one outstanding work order at the time, May 6th, that this whole report was done. So one outstanding work order is not bad. Let's see if I can blow this up. Yeah. So one outstanding work order is not bad. And then I look at it, it's 16.4 days. General maintenance, kitchen drawer came apart. So it was opened on, and this is where you get some detail. It was opened on May 6th. It could have been opened on May 6th because this report, so someone played numbers. That's why this looks bad. Somebody played some numbers on this one. Probably put the wrong date on this one, and it would have been a red flag anyway. But it says 16.4 days. Kitchen drawer came apart. Clearly, that's not a priority. And especially if this was during COVID, more of a peak or the peak scare of COVID, we had many tenants that would report something wrong, but not let anybody in. And they wouldn't let anybody in until they were gone, and many tenants started working from home. So it became an issue. So this was a non-priority work order. So not as concerned. Again, if I'm looking at this, and this is today, I go back, and since it is May 6th, I go back and I say, hey, why does this say it was open May 6th? The date's May 6th, but it says it's 16.4 days out. So that's an anomaly. I'm actually glad I caught this. I didn't catch it the first time I did this presentation once before. This is a perfect example of an anomaly. So somebody put data in wrong. And it's not that someone's going to get in trouble, but it needs to be fixed. It needs to be fixed that day. So the next one, let me shrink this back down. Rehab in progress. So we created a very high level. This is like a 20,000 foot level. So when you buy an asset, typically you have some CapEx or rehab dollars. And so with respect to CapEx and rehab dollars, your lender is going to escrow some of the money. So what we would do is we would have a budget and we would have actual. And as you can see right here, actual is the green line. It looks black. It's just the coloring. Actual is the green bar, and the black line is the budget. So everything was going well on this one, except for pavement. Repairing the pavement, it went over budget. And I'm not sure, rehab in progress, so it was still going on. So yeah, we ended up having more parking lot repairs than we had anticipated on this particular deal. But then on the flip side, the green rewards repairs, which they had allocated X amount of dollars, we got in, we were in much better shape than we expected, and we were able to do the repairs for less than half. So this is a nice kind of high level barometer of whether you're utilizing your CapEx properly or not, and how you're coming in with budget. Now you'll get these numbers on your balance sheet and your income statements quarterly, monthly and quarterly, so you can see how your budget is going against your actual, but you're not going to get it daily. So we put this in just so we have something to look at. If something just pops out all of a sudden, we want to make sure, we can see it. So not a huge KPI. Again, we create KPIs. This was created because a client of ours requested it, who we developed KPIs for. So I included it in mine, but I never really look at this aspect of it. And there's another one. We had another client that said, hey, I want kind of a high level, what are the actual dollars I've collected month to date? So great. We basically took this is a KPI that comes directly from the accounts receivable reports that are in the applicable property management software. And so it shows a running total of how much has been received And again, this report was through May 6th, I believe. So this is what had been received through May 6th. So some people find it helpful. I don't need to see this because I can go back and look at the percent of revenue collected, but it'll have other things that aren't necessarily showing percent of revenue connected from leases. Some of these are separate from leases. They're fees that are associated with getting a lease. So it'll show a little bit higher number. But this is more for, we do have our accounting person look at the same KPIs we do. So maybe it gives them a little high level look and they know where to go to look for something if one of these numbers looks way off. So one of the other things I wanted to show real quick, I know this is geared more towards multifamily, but KPIs are used in every business, okay? This happens to be a farm business, indoor farm business. And so we track the types of plants. We have a humidity sensor that tracks the percent of humidity every day. This is indoor. We have a temperature sensor that tracks the temperature. We have different stores that we would send samples to. We have a water summary. This is key, especially when you're dealing with crops. All of a sudden, oh my God, there's no water here. Well, that's because it's a research and development room. So obviously there was no R&D going on the last half. This is actually current as of a few days ago. So the reason I show this is simply KPIs are used in every aspect. Again, that's for farming. I have this one. So this was, I don't have much to hide, but I even put a couple things from Kaliser Associates, and this is as of today. I look at this is my law firm, and I look at my law firm, and when I want to talk to my team and the other two lawyers and paralegals, what's going on, who's working on this, how is our flow looking, let me tell you, 2 months into COVID, I didn't have 55 real estate matters open. That's 55 different ventures that are going on that we represent right now. Most of those are syndications. I didn't have 55. We were more like 12, 13. So I am very, very, very happy to see this, and it's encouraging. I look at this every single day. Do I have programs that I can go into and I can log into and it gives me a little more detail? Absolutely. But I don't want to. I want to look at law firm. I want to look at my title. I want to look at our multifamily. I want to look at our helium projects. I want to look and see, everything we're doing very quickly. And then if I want to focus on one or more of them based on what I saw my KPIs, I can. So this just gives me a summary real quick. Okay, so we have 89 matters open right now. And I can see they're almost always going to be heavily real estate because these are all syndications. So business is good. If anybody's curious, lots of people are doing syndications right now. We have 55. I think 7 of them, we represent the seller. So the rest of the 46 plus 2, 48 of them are people buying assets right now. So despite what you see in the market, at least we're a barometer of what's going on. And this is not just Texas. We represent about 70% of our deals are in Texas, maybe 60%, 40% are outside of Texas. And this just goes and shows how many of our deals closed per month. Now you can see you get into February, March, April, May right here. We have a dip. Well, this is COVID. All this is COVID. So it's interesting. We're going to have a huge spike next quarter of some of these deals over here closing. Those of you that are syndicators understand why, especially the end of the year is big. One, things were very slow from March through really most of July. And now people are wanting to invest and there's some deals opening up. And on top of that, if you can close a deal before the end of the year, you get to take the accelerated bonus depreciation. Investors love that. So a lot of people are trying to close on deals right now to make sure they're closed before December 31st for the bonus depreciation. Here's another thing. We prepare legal docs for title companies, our own title company and a couple others. And so we just track, the volume of legal docs. These are like little deeds. They're like $25, $50 deeds. They're nothing special. But I have a paralegal whose sole job is to prepare those deeds. And so we track to see how busy it is. like right here, we have 21,325 in unpaid deeds. Now, most people would think, oh my God, you need to make sure you're paid on those. Well, I know for a fact every one of those are through the Texas Department of Transportation, and they pertain to the high-speed rail that's being built between Houston and Dallas. So they pay, believe it or not, once a year. So we'll get a check for that, I think another month or two. And then closings we've got coming up in the title company. This is just a graphic. I'm just curious. I'm like Curious George. I love to see what's going on. This shows different counties. We're closing in each one of these counties. We have a closing coming up in the next 45 days. And then there's me. That's my firm, our contact information. I'm running right towards the end of it. I'm looking at my watch. I have like 1 minute left. I'm gonna look and see if there were any questions. Real quick, Merrill, do you have a list of KPIs you can share? Jim, I do. If you guys will email me either at info@kaliserlaw.com, which you see on the page, or mkaliser, kaliserlaw.com. Are you selling your software? Yes. Oh, Jim's asking the same questions. We do sell this. We don't sell it, we license it. There's usually an initiation, a startup fee, because certain software programs require a fee for us to even get into their API, into their data. But once it's done, it's anywhere from a couple $100 to $325 a month. But yes, we do that for those that are interested. And does it require manual input? No, it requires input that your property management company already does. We prepare everything for you. Gary.
Yes, sir.
I finished with 30 seconds left.
Boom. Great stuff. I mean, I love delving into KPIs, and obviously you know, managing all the different things that you do. You really need to be honed in on it. And so great presentation. I mean, I just see all these questions that we have here, and they're just going to have to meet us in the VIP room and get those answered.
Sounds good. I want to thank you and Kyle for having me on, and great program you guys are putting on for the last 12 days.
Well, I appreciate it. I mean, we reached out to all the experts, and so happy for you to come on and share. So thank you.
Thanks, guys. Really appreciate it.
Thanks, Merrill.
I'll see you at 5 and at 1:30, guys, Pacific time. We've got home base doing a Facebook Live, and then at 3 o'clock Pacific we have Tim Broad. So we'll see you back soon. Thank you, guys.